Live by the sword, die by the sword. I think you could replace sword with rate or cost overruns if you're Jerome Powell. Let's get in the weekend update right now. Okay, let's go. Welcome to the weekend update. Thank you for watching. Thank you for subscribing to Lending Perspective on Instagram and at Lending Perspective on YouTube, where you can watch this content whenever, wherever. Today's weekend update sponsored by Orange Cream Bubbly, the best bubbly you can buy. Let's jump in and let me tell you a little bit about what we're going to look at today. Let's start with the market. I'm going to talk about the market. I'm going to talk about volatility that's being created. I'm going to talk about live by the rate, die by the rate, and why, if people are putting an artificial metric of sub 6% on their affordability, they're probably missing great opportunities, and they're kind of missing the big picture, which is we can create affordability below 6% by far in today's market, regardless of where the market rates are sitting. If we look at where we are right now, we've had 7 banks reprice for the day for the worse. That means the interest rates they launched on the rate sheets this morning were worsened at some point this afternoon. Why is that? Well, you're going to see some red here, and that's because the 10-year Treasury has sold off, and we are now above 4.2, which we haven't been any point in the last 3 months on yield. So as the interest yield goes up for the 10-year Treasury, which is one part of fixed interest rates and ARMs, we're going to see interest rates go up. And last week's update, I was talking about the move of $200 billion in mortgage-backed security purchases. Those are the numbers up here by the government and the government-sponsored enterprises, something I also called, and you've heard before, as quantitative easing. So artificially lowering interest rates using purchases of one of the components of mortgage rates. Well, you takes two to tango, and if we're not seeing a flight to safety in treasuries, that's going to offset some of the announcements that were made last week in terms of bond purchases. Something that's also curious is that in years past, administrations past, and call it a bygone era, when you had some of the geopolitical things going on, started with Venezuela, now it's certainly happening in Iran, and then the murmurings about Greenland. Not to mention the fact that we've got the chair of the Federal Reserve, Powell, streaming a video to our living rooms on Sunday night that looked very much like a hostage video regarding threats of indictment from the DOJ for cost overruns on the Federal Reserve physical buildings. Crazy times we're living in, and usually this kind of craziness creates a flight to safety in treasuries. We're not seeing that. We didn't see that with Venezuela. We're not seeing that with what's happening in Minnesota. We're not seeing that with what's happening in Iran. We're not seeing that with what's happening and all the talk and saber rattling around Greenland. So it's just giving me more of an opinion that markets seem to be unfazed by geopolitical news and noise. They're not putting their money in safe havens like the 10-year Treasury, and that's going to make it harder and harder for interest rates to be reduced, even if we're buying mortgage-backed securities. If we look at the green line here, this is our 50-day moving average. The 10-year Treasury yield is well above that. Our 25-day average is a little bit higher at around the 4.6 mark. Well, now we're over 4.2, and I think that means we could be in for a rough week next week, given the news of this week, really for economic data, was that the headline CPI came in year over year right at expectations of 2.7%. So 2.7 is a much, much welcome number as opposed to the 5s, 6s, and 7s that we saw in years past, but still well above the Fed target of 2%. You want more information on this, read top stories like mortgage rates in the week at highs. This is true, and this is what I'm telling you now. If you want to know about the highs or you want to know about the whys, maybe you should look at why some lenders, again, price a little bit later or earlier, respective of where they are in the country. A big differentiator between rates that you may hear from your clients is the difference of lender type. So be very alert to the fact that people associate more affordability with lower rates. Certainly part of the equation, but if we're talking about overall success and outcomes, generally an online lender or out of market lender, or even maybe more detrimental out of market broker, may not protect the experience and certainly the outcome for your clients. I've definitely seen mortgage brokers, due to wholesale lenders like United Wholesale and Rocket, throw out some really interesting offerings for a very, 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 very short period of time. And so if your client wasn't in a position to lock on those, you're gonna generally see some increased rates. And it's important, if your client was thinking they're buying at one rate, quote, and they're gonna lock in at something much different, that could have a detrimental impact on your deal. Mortgage bankers generally can be a little bit slower to react upwards from pressure, and conversely, they can be a little bit slower to come down in pressure because we're seeing such whipsaw and volatility in the market. So remember, just go to the Weekend Up, WKNDUp.com, and grab information on rate watch and market summaries. Some anecdotal news. Maybe this helps you. In San Diego, we had 2 listings featured last week. They were brand new listings to the market on Friday. Both were in escrow on Monday, and these are vastly different properties. Jack Archie's property, beautiful home in Del Sur, over $2.2 million in list price, was off the market as of Monday afternoon after a busy open house weekend at a price point that tends to be a little bit more challenging today. Conversely, Zach Brown's listing down in the College area, single family home with ADU potential, listed below 950,000, is in contract as of Monday as well over list price. So some good news anecdotally for what's happening in the market. I know there are homes that still need to get into escrow. If you have clients that are sitting on the fence and want to look at structures that are going to make this home affordable for them today, even if rates are ending higher today than they were at the beginning of the week, we can certainly do that. Educate your buyers how we make affordability happen, and importantly, educate your sellers how we help them maximize their sale price, maximize their net sheet, but maximize affordability for qualified, committed buyers. Taking a look at some of the numbers, interest rates as of last night, when these reports generally get run, we're down a little bit on the week, but I expect this to change come Monday when we send out our market update showing that rates did tick up overall for this week. Application volume is up. For us, it's about a 50-50 split, slightly more towards the refinances, but averaging the last 2 weeks a new purchase pre-approval application per day. And we're doing all the things that we normally do, giving them access to the MTG dashboard, and more importantly, creating their own buyer dashboard, which we do for all of our clients, that boosts their information and their confidence. But you'll look here and see, and we'll post a link to this. Mix is about 50-50 split. Live by the rate, die by the rate. Well, rates were a little over 6.3% in October. They're a little over 6.1%. That's less than a 0.25 or a quarter difference. Not a huge difference, guys. Where we're making the strides is on seller incentives for homes that are aging, and hopeful sellers that are thinking it's a new year, new outcomes. Well, the rates aren't much different. So the strategies are really, we're going to make the difference. Make sure your clients are visiting mtgdashboard.com to get some of the same tools that you would use to boost their confidence. Mortgage rate watch, market summary, mortgage coach scenarios. If they're current clients of ours, we talk about rate rebound or shifting to get some of their equity out, reasons to refinance, and not to be lost on all this, the all-in-one loan. In the beginning, I talked about cost overruns, not just for the Fed, but cost overruns on renovations for sellers or buyers. If you have clients that need to do some significant updates, upgrades to their home prior to going to market, we can help with loans that will help access some of their cash and capital to do the repairs to the home prior to sale. Conversely, if you've got a buyer that's wanting to expand their inventory and look at homes, even though they're using financing that may say cash only, well, the renovation loan will allow us to buy a home that has cracked slab, health and safety issues, or other encumbrances to obtaining a mortgage that we can wipe away using renovation loans and money for those repairs post-close. So you don't have to wait for the renovations to be done. A buyer can actually buy a property that has an issue using borrowed funds to close in a quick manner on that listing. So if you're looking for more inventory or a neighborhood that's highly specific for a buyer, and a property has some needs that require it to be cash only, let's look at a renovation loan and see if that's going to help. And all of this, of course, starts with our buyers buyer pass. So when we pre-approve a client, they get a digital buyer pass. We do not send PDF pre-approvals anymore. Those are antiquated. I no longer use pager or a rotary phone. This is no different. Guys, when our clients get a buyer pass from us, it's downloadable to their Apple Wallet or Google Wallet and includes all the reasons they are cut above the competition from a qualification standpoint. We include our team's information, your team's information, approval letter, proof of funds, AUS approval. This is one link with comprehensive information that listing agents want and need to know when they're representing their sellers and assessing committed qualified buyers. And that's it. That's a lot for you guys today. Let's use the tools at our disposal. Let's use the information, not disinformation, to help people make more educated, confident decisions in entering the market or even, putting their home on the market. And do your best to serve those that need and trust you in order to bring the results to them. I appreciate it. I'm available all weekend. Call, text, or email, or drop a comment down below. The report is thawing. A great thaw for 2026. Are you feeling it? Are you feeling the market heating up a little bit? What questions do you have that I can help you with? And why do you think momentum is either gaining or stalling? Have a wonderful weekend. Talk to you soon.